Welcome back to TechKidFX for another quant price prediction update, and in this video I'll be giving you the short-term and the long-term scenarios that I'm expecting to play out. And before I start the video, make sure that you give me a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to kickstart the video here on the daily chart by first giving you a brief of what has been happening here on the quant chart, where you can see that quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark. And after seeing that low at around the $40.1 mark, we started to see a very nice bounce to the upside, obeying the Elliot wave structures, and that is better seen here on the 4-hour chart, where you can see I have this Elliot wave structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that higher Elliot wave count 1 to the upside. And whatever we expect next after seeing the formation of a higher Elliot wave count 1 is the formation of that higher Elliot wave count 2. And I believe that is the movement that we are seeing right now. And once we see the low for that higher Elliot wave count, then we can expect a bit of a bounce to the upside in the formation of that higher Elliot wave count 3 to the upside, and sketching out a minimum target area to the lower side in the formation of this second wave, using the Fibonacci's, connecting them from the low of the first wave down there to the high of the first wave. That gives me a minimum retracement area to the lower side in the formation of that second wave between the fib level 0.5 and the fib level 0.618, which is a target area that we have fully maximized. And because of that, I need to extend my target area back to the fib level 0.78. And now that target area lies between the $135.3 mark and the $81.2 mark, and that is because we are seeing much of a consolidation right here, and I'm still expecting one more new low in the formation of that higher Elliot wave count 2. And once that happens, then we can expect a bit of an impulsive movement to the upside in the formation of these higher Elliot wave count 3 to the upside. And because the second wave is a corrective wave, we also expect to see an ABC corrective structure in the formation of a second wave, and I believe we are seeing such a structure right here, having this as the wave A, then a wave B, then we have continued pushing even low in the formation of this wave C. But I'm still expecting a new low within this red target area, that is a new low below the low at around the $94.4 mark. And once that happens, then that will be the low for that higher Elliot wave count 2. Then expect a bit of a bounce to the upside in the formation of a wave 3. And because we're in the formation of this wave C, which is an impulsive wave, we also expect to see fractal waves in formation within that wave 3, that is that wave C to the lower side. And I believe we are seeing such a structure, having a 5-wave structure, having this as the first wave to the lower side, then we saw a wave 2, then a wave 3, then the movement that we saw right here making our peak at around the $133.6 mark might be the formation of that wave 4. Then I'm expecting one more new low in the formation of this wave 5, which should fully maximize the formation of this wave C, and also fully maximize the formation of this higher Elliot wave count 2 to the lower side. So that is the short-term scenario that I'm expecting to play out, basing it on the Elliot wave structures that I have right here on this chart, and also giving you the short-term scenarios that I'm expecting, basing it on the key areas of support and resistances. You can see that right now we are trading at around the $107.1 mark. We are trading between two key areas of support and also a key area of resistance. That is the key area of resistance at around the $110.9 mark, and the key area of support at around the $100.3 mark. And there are chances that now we have managed to break above the 20-day MA, we can continue pushing even higher. And if that is the case, we can get back to the key area of resistance at around the $110.9 mark. And in case we manage to break above that key area of resistance, then I would expect a retest of that key area of resistance. And once the retest is in, then we can continue pushing even higher. And in case we get to that key area of resistance and get rejected, then I will expect a bit of a pullback to the lower side, get back to the key area of support at around the $100.3 mark. And once we lose that key area of support, then I would expect a retest of that key area of support, then continue pushing even lower. And in case that movement plays out, then that could be the move to give us a new low in the formation of this wave 5, and also complete the formation of that higher Elliot wave count 2, and also the formation of this ABC corrective structure that I have right here. So those are the two possible scenarios that can play out here on the quant chart, basing it on the Elliot wave structures and also the key areas of support and resistances, and also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 49 mark, meaning we have massive room for us to support any movements to the upper side. Also taking taking a look at the MACD, on the MACD we have printed a bullish cross, and that would mean her prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.